make sure your team is solid.
Right. Woo. So going along the same lines of having a good accountant, 1031 exchange. Have you ever heard of a 1031 exchange?
No, we're good.
A 1031 exchange.
1031 exchanges is awesome. Basically, it's a
going along the same lines as we were just talking about with the CPA. There's something called a 1031 exchange. I think probably somebody's heard this a little bit out there, and they've heard something about you can save taxes or something. So I'm going to let you talk here a little bit. What's a 1031 exchange?
1031 exchange is one of those programs that I think really help the people that understand the real estate and have become wealthy there stay wealthy or continue to. So a 1031 exchange in a quick nutshell is you sell property, you take the monies that you've got from that property, and you can buy, and you have to buy like for like property, and then it minimizes the taxes on the sale of the first property. I have a gentleman that I do a lot of stuff with. He's out of the C word. We won't the C word that has water attached to it. That's west. Anyway, he's from the C word. And he's got properties down there, and he was telling me that if he just sold his properties, that the state of C would end up taking like upwards of 60 to 65% of the profit of the sale of that.
Holy cow.
Because he's moved out of state.
Oh my gosh.
And so in order to avoid that, he's done 1031 exchanges to where he's sold properties in C-Town and then moved them over here and has bought rentals and used the money that way. So it is a very good strategy to help keep your money in your pocket and not paying taxes.
So when you sell an investment, whether that's real estate, stock, anything, you have what's called capital gains. And so capital gains are what you have to pay on your taxes is income. So you'll have this the difference between what you purchased it for and what you sold it for, and then that you have to go and pay capital gains on depending on your tax bracket. And so you're talking probably 30%-ish. And you imagine losing 30% of all that money. That can be a big chunk, right? On $100,000, that's $30,000.
Yep.
So if you can take that whole $100,000 and reinvest it into something else, now you're not losing the $30,000. You're putting more into that next property and just pushing it all forward. And you can continually do this over and over and over and avoid that capital gains.
Yeah. So with a 1031 exchange, what they require you to do is you have to identify, not purchase, but identify within 45 days properties that you want to purchase.
Within 45 days of
the sale
of the home.
Yeah. So you sell the home, you've got 45 days, and then you have 180 days in order to finalize the purchase.
Is that 180 days from the sale?
From the sale.
From the sale.
Yeah.
Got it.
So again, this gentleman from C-Town that we were talking about, he actually came into town, started calling real estate agents, and started with the A's, and 3 days later gets to the T's. So called me, and I did something really weird that most real estate agents don't do. I answered my phone.
Unbelievable. People don't answer their phone?
No.
Oh my gosh.
Anyway, answered my phone. He had a 1031 exchange. He needed to spend his 1031 exchange, and he was down. He'd already wasted 42 days. He had 3 days.
Oh my gosh.
To identify these properties and get them under contract so that he can move forward. So I helped him buy 3 houses in 3 days, all with the 1031 exchange. It was awesome.
Nice job. That's awesome.
But it was all from answering my phone.
You answered your phone.
Yeah.
That's all it took.
And
he went from A to T before he got someone to answer a phone.
Yeah.
Unbelievable.
Yeah. It is. And that,
Listen, everybody, you don't have to call from A to T. You just start with Doug
the
Tarter,
T.
and you're good to go.
Anyway, but with your 1031 exchange, like we've hammered on a little here, there are tax implications, there are tax strategies, there are tax things so you really need a good CPA, a good personal CPA.
Well, there are 1031 exchange companies, and you need to use them. They usually cost about $750, I think, and they will handle the transaction, because to do a 1031 exchange, you can actually never touch the money.
Right.
Meaning the money has to go from the sale of your property into the 1031 exchange company. Then the 1031 exchange takes that money and puts it in to the next property you're buying. If it's somewhere within that transaction, the money enters your account, you no longer are eligible for that 1031 exchange.
And typically with a 1031 exchange, when you buy something new, you have to own it for 2 years to avoid the tax problems.
And that's why earlier I was saying, you get into a property, you're there for 2 years.
Yeah.
It's just an important thing to think about, at least a 2-year period with owning a property to be able to be okay with these 1031s.
Yeah.